recently pledged $68 billion to India in one visit, in one summit. That's not aid. That's not charity. That's a strategic alarm bell, and China rang it. Here's what's actually happening. The world's third largest economy is quietly, deliberately pulling its money out of China and redirecting it straight into India. This is one of the biggest capital shifts in Asia in decades, and most people are not paying attention. Let's break it down. For nearly 40 years, Japan built its economic future inside China. Factories, banks, supply chains, from cars to electronics, Japanese companies were woven deep into China's rise. But that bet is souring. China's growth has slowed to around 4 to 5%, its weakest since 1991. Labor costs have climbed to nearly $8 an hour. Japanese investment in China collapsed from over $11 billion in 2020 to just $3.3 billion in 2024. That's a 70% drop in 4 years. Add to that geopolitical tensions with the US, supply chain shocks from COVID, regulatory unpredictability. Japan isn't just pulling back, it's repositioning. Enter India. Young population, massive domestic market, labor costs at just $1.1 an hour, a fraction of China's. Japan's annual direct investment in India went up over 7 times between 2021 and 2024. And then came August 2025. Modi flew to Tokyo. Japan pledged $68 billion in investment into India over the next 10 years. It was an upgrade from a previous 5-year $34 billion goal. The numbers doubled. The ambition doubled. Japan is already India's 5th largest foreign investor, having channeled over $43 billion between 2000 and 2024, with over 1,400 Japanese companies operating across India. Now Japan has a new Prime Minister. Shigeru Ishiba is out. Sanae Takaichi won a landslide election in early 2026, and she's known for something important. She's far more hawkish on China than her predecessor. Is the India deal still on? Absolutely. Within days of taking office, Takaichi personally called Modi and confirmed Japan would continue to advance the joint vision for the next decade, including investment, security, and semiconductors. Takaichi is now considering a visit to India in July 2026, with talks expected to take place in Assam, where a semiconductor plant is under construction. That's not a coincidence, that's a signal. This isn't just pledges on paper anymore. Real money is moving. Toyota, Suzuki, and Honda are collectively investing $11 billion in India's automobile sector. Suzuki alone is scaling up to produce 4 million vehicles annually. Honda is positioning India as its production base for electric vehicles starting 2027. Toyota announced 3 new assembly plants in Maharashtra, with the first set to begin operations in 2029, tripling its India production capacity to 1 million units. On chips, Renesas Electronics of Japan, in partnership with Stars Microelectronics, is setting up a semiconductor facility in Gujarat with a daily capacity of 15 million chips. Meanwhile, Tata's semiconductor plant in Assam, where Japanese technology is expected to play a role, is targeting chip production in 2026 itself. The Japanese ambassador has already visited the site. The March 2026 India-Japan trade talks in Tokyo also produced fresh EV battery investment commitments of up to $400 million from Japanese firms. This isn't just business, it's geopolitics in slow motion. Despite the leadership change in Tokyo, the institutional architecture of India-Japan relations remains strong. The Quad, the Special Strategic and Global Partnership, and the Act East Forum all provide continuity. India is not just a factory floor for Japan. It's a long-term partner in reshaping the Indo-Pacific away from Chinese dominance. Can India replace China? Probably not. Not yet. The infrastructure gaps are real. The execution challenges are real. But that's the wrong question. The right question is, can India reduce the world's dependence on China? Right now, Japan, under both old leadership and new, seems to believe the answer is yes. $68 billion and counting.